Friends, you must have seen many times in TV or newspaper that today's Sensex went up by so many points or Nifty went down by so many points. So what is this Nifty and Sensex? Why is it shown in the news? How is it calculated? We'll understand this topic in full detail with examples. Must watch the video from beginning to end so that no information is missed. So before understanding Nifty and Sensex, we have to understand Indian Stock Exchange. Stock Exchange is basically a place where buying and selling of stocks takes place, which we call stock market. And these are the two largest stock exchanges in India: BSE, Bombay Stock Exchange, and NSE, National Stock Exchange. BSE was established in 1875 and it is the oldest stock exchange in Asia currently. BSE is the 12th largest stock exchange of the world. BSE is located in Dalal Street, Mumbai, Maharashtra, and more than 5,500 companies are listed in it, whereas the National Stock Exchange was established in 1992. Currently, NSE is the 10th largest stock exchange in the world. This was the first stock exchange in India in which modern, fully automatic, screen-based electronic trading system was provided to ease the trading facilities. The head office of NSE is also located in Mumbai, Maharashtra. What is Nifty and Sensex now? These are indexes. One of the criteria to know the economic development of the country is the financial performance of the shares of the company. But there are thousands of companies listed in the stock markets. So if we want to know the performance of the market, then it is difficult to track the stock of each company at a time, isn't it? So that's why a sample is taken of companies which represents the whole market, and this small sample is called index. So the index of BSE is called Sensex, the index of NSE is called Nifty. Sensex is also called BSE 30 because in this, out of these 5,500 companies, the top 30 companies are selected based on their market capitalization. Companies like Infosys, ITC, etc. For example, assume there are only two companies in a market, X and Y. X company has total 250 shares, out of which 200 shares are available for general public and 50 shares are with the company's management, and price per share we assume rupees 200. Then what will be the total value of the company? Total number of shares multiplied by each share. Value 250 multiplied by 200 is equal to rupees 50,000. This is the total market capitalization of company X. Before 2003, the total market capitalization was considered to calculate the Sensex. But since 2003, the free float market is considered. What is the difference between these two? In the free float market, we do not consider the shares held by the management of the company. We only include the shares available to the general public. So free float market capitalization will be free floating shares multiplied by share value is equal to 200 multiplied by 200 is equal to rupees 40,000. Assume company Y free floating shares 158 and free float market capitalization rupees 60,000. Then entire market free float capitalization will be 40,000 plus 60,000 is equal to rupees 1 lakh. Now let's see how Sensex will be calculated from this. So to calculate this, we have to take base index. So just for example, let's assume in this market we are calculating Sensex from last 10 years, and when first time index was calculated, then market value was rupees 10,000. Now we have to consider this 10,000 equal to 100 Sensex point. This is what we call base index. When BSE started the index for the first time, the base was 100. It was kept to ease the best calculation. So as per our example, the free float market capitalization is 1 lakh of 10,000 if equal to 100 Sensex point. Then as of today, 1 lakh will be equal to 1000 Sensex point. Right now, suppose next day company X gets good profit and each of its share increases by 50 rupees. Then free float market capitalization will be 250 multiplied 200 is equal to 50,000 plus 60,000 is equal to 1 lakh 10,000, and according to this Sensex will increase by 100 points and will be 1100 points. So friends, this was an example. So this is how free float market capitalization and Sensex are calculated, on the basis of which those 30 companies are included in Sensex, and these companies change from time to time, and these 30 companies are of different sectors. Suppose today is on 634,000 points. If it goes up means points increase, then it means that out of these 30 companies, the financial performance of majority of companies is good. The company is getting good profit. People are buying shares of these companies. Ultimately, demand is increasing. This is also called bull market. And in other case, if Sensex goes down, points decrease, it means that most of these 30 companies financial performance of the company is not good. The company has less profit or the company is not able to develop. People are selling companies share, means the demand is decreasing. We also call it bear market. If the Sensex is going up, then it is a symbol of economic growth. We decide on the basis of Sensex whether the market is going up or down and how is the economic growth of the country. Now, like Sensex is an index of BSE, similarly Nifty is index of NSE. But what is the difference? In BSE, the average of top 30 companies is taken, but in Nifty, the average of top 50 companies is taken. While calculating Nifty on the basis of market capitalization of companies, the base year is taken 1995 and the base value is 1000 points. So the question is whether the same company which is listed in BSE can also be listed in NSE. So look at it in this way: if you buy a product online, then there are many websites from which you can buy. For example, Amazon, Flipkart. That product is available on both the websites, and which website you find convenient, in which you get a right price, you buy from there. Similarly, a company can be listed in more than one stock exchange, and maybe the stock price of a company may differ in BSE and NSE because it totally depends on the number of buyers and number of sellers. So in today's video, we have seen what is a stock exchange, where the buying and selling of shares take place. The two largest stock exchanges in India are BSE, NSE. They also have indexes which we calculate on the basis of their market capitalization. The index of BSE is Sensex, in which 30 companies are listed, and index of NSE is Nifty, in which 50 companies are listed, and the index shows the economic growth of the company and the country. So now you will see Nifty and Sensex points anywhere. Then you will understand what is meant by those points in actual.